Hello and welcome everyone to today's Stocks and Crypto TA Charts live stream. It is Saturday, April 2023. It's about 3 o'clock p.m. Eastern Standard Time. So doing a earlier stream this weekend. This upcoming week, there is a lot going on in the stock market. It's going to be a huge week in terms of stock earnings. And as we've seen with cryptocurrencies, there is a correlation with the volatility between stocks and crypto. So this is Big Tech Week is starting this week with the earnings. Let's go ahead and begin. First off, I want to say thank you for joining the stream. I am streaming live on TradingView, YouTube, and Twitch. We also, I'm going to move back to Twitter from Discord. So the Discord group, I'm going to slowly transition that back to Twitter. I originally started on Twitter several years ago. So we're moving back to Twitter, the Discord group. Just a heads up for that. Also, I want to make sure people saw my idea about the SPX. We'll show that later after the intro here. All right, so for stocks earnings volatility, there's a lot of companies, most notably Microsoft, Google, Meta Platforms, Facebook, Amazon, and more. But those are the kind of big names that we're looking out for. The other names, smaller names, but still global. Coca-Cola, First Republic Bank, because of the bank problems, 3M, Chipotle, General Electric, General Motors, JetBlue, McDonald's. We're going to see what's going on there. McDonald's had some of their layoffs and they're changing some of the ingredients as well. See what's going on there. UPS, Verizon, Visa, Texas Instruments, Boeing. I mean, these are global. eBay, Roku, Activision Blizzard, Capital One. There's Visa as well in here. Intel, MasterCard. So we have big finance and we also have stocks. Some energy too. Chevron, ExxonMobil, etc., etc. There's a very long list. In terms of economic data, there's slightly less in terms of major volatility data, but we do have that consumer confidence, advanced GDP. We had the core PCE price index. That's the biggest economic data in regards to inflation. And we have employment cost index. So in terms of the current events and news, a little bit shorter is we have USA stock market earnings season is starting to really ramp up starting this week. However, the inflation data is slowly starting to come down. And I'm talking about the CPI, PPI data, and the PCE data as well. Now, for cryptocurrencies, it's very correlated with stock market volatility, which is why I watch both very closely. And in the back end, which not everybody might be thinking about, is crypto exchanges are actually under pressure from SEC regulation right now. Yes, we have the Litecoin happening in 4 months, in August, I believe. But in September, we're going to have that IMF white paper that's about the global regulation of cryptocurrencies. So if we put multiple pieces of the puzzle together, we can see that the stock market right now and the crypto market as well, we hit that resistance. So I did want to show my idea that I published on Twitter and TradingView is on April 17th, which 5 days ago, I wrote S&P 500, NASDAQ, Dow Jones, Bitcoin, we're at resistance before earnings. And we're in a zoomed up picture right now, but you can see what I was talking about. We hit that resistance. I'll draw it again later, but also Bitcoin was at a resistance. If you're a crypto trader, this was an important chart for you. Basically called the top before we dropped. Okay, and the long explanation here. But we were at a resistance for 1, 2, 3, 4 assets. Okay, so that's why I released that, because I noticed that I'm like, wait a second, we're at resistance right here, right before earnings. If we do not break out up, we're probably gonna pull back down, and then that's exactly what happened. Alrighty, let's start off with stocks. SPY, S&P 500. First thing I noticed on this chart, again, drawing it, is the resistance zone. Most notably about 415. Yes, there's a lot of drawings on the chart, but I'm talking about this blue resistance right there. Okay, it's starting to almost look like an ascending triangle, basically. Do you see that? It's basically starting to look like a ascending triangle. So if we continue to have bad earnings, what happened when we hit this resistance? 1, 2, 3. This is the fourth time, basically, the past 6 to 9 months. We could pull back down to about 397. Okay, so then I'm going to move my target down to 397, and the breakout spot now is about 416. Our ultimate target of 428 up here didn't quite make it because earnings is putting pressure. Okay, so we need some positive blowout earnings from these companies. However, instead of hoping for it, just wait for the data and make my move afterwards as an investor. But those are the two targets. We're hitting that resistance at 416, the support level somewhere in the upper 390 zone temporarily. If we hold up though, let's say we terms of this low, right? Low, low, low. If we make another higher low, that's okay. Because we could fall down and then bounce up out of here, let's say 3, 6, 9 months, maybe even next year. But I'm hoping this year we could get some kind of positive breakout, but it might be tempered by the actual inflation data. All right, let's go to QQQ. All right, NASDAQ, we're also at a relative resistance zone. We could see we had some gap resistance. Okay, this is what I'm talking about. So if this is our high, low, high, low, high, we should try to hit a low somewhere maybe right at 300. Potential new target estimate. And if we're going to have a breakout, we definitely have to break out above 327, the upper purple dot. We are starting to see on the daily, I am right here, this double top right below 322, something to watch out for. And we have big tech earnings right now. The only thing that's holding the market up is we have this up cross, but in terms of if you know your divergence, if you know your patterns, we golden cross, which is good. That is good. But at the same time, why are we pulling back is because the technicals are showing we have a pullback on some of this momentum. So we could pull back all the way down to 300, retest this 200 EMA, which is hard to see, but if you zoom in, you can see it. Right here, 299. Okay, mark that for next time. We could just retest that, and the bulls are going to try to defend this 299 area. Let's go to DIA, Dow Jones. Also, another resistance zone you could see right around where my line is, about 341. Okay, and I drew it in blue here. Essentially going sideways in the long term, but it's starting to angle down. That's not really good. If it was going to be positive, we had to have this major breakout. We just went from a relative low to a relative high. And it makes sense before earnings that certain swing traders, they're going to take their profit. This is better than this price action going sideways is better than crashing down. But at the same time, we are not going sky high. Okay. All right. Now, just a quick glance at the weekly for these three charts. We did have kind of this doji candle on last week. Same thing with NASDAQ. 3 weeks of consolidation flagging. That's still not really powerful setup. And then we have a doji to start off the week. So if we don't break out to higher highs, we could be in for that pullback on the relative market. Take a quick look at gold. Even gold starting to see this topping out action. Okay. We have this support to the high. If we draw this line here, we could see it is making its... We hit that relative high spot. Tried to break out 2 times and failed, so it pulled back in. So our low, somewhere here, maybe in the gap fill area, 179 could be a potential target for the low on GLD. We have to break out above 190 to continue the uptrend. Silver on the daily, very powerful bounce. I mean, that's 29%. Swing traders probably going to take their profit on this one. We're from the low to the high spot of support to trendline resistance. Also, we could start to see if the new uptrend is going to form. We could even pull back down to the middle heart line area of 21-ish dollars. And we would have to break above 25 to continue that uptrend. US oil, pull back down to gap support right around that $66 range. The broader pattern that I'm seeing is this right here. We had that gap up, but still angling down. Does that make sense? We're still angling down. So this thing is not angling up anymore. We're trying to break out. We can, if it is going to break out, just retest, hold this 66.28, this 66.43 area, and then try to get the higher high bounce up to 75 to 80 range, somewhere here. If it's really bearish on news or something goes bad, could crash back down to 56. UNG, a little bit tricky, but we're starting to see potentially, hopefully this might be a temporary bottom for UNG. I did do a reverse Fibonacci extension to the downside. So you can see if it keeps crashing down, it could definitely hit 542. But if we happen to upside down head and shoulders this area, that would be a nice reversal spot, maybe back up to $8, $10. But it needs to hold above $6 for a considerable amount of time. Okay. So let's just take a quick look at some of the earnings this week because it's going to be a big week. Start off with Microsoft. These charts are going to look very similar, so I'll just go quickly. Microsoft, if they have bad earnings, the support in this 257 range. If they have good earnings and report, we could hit the 313 area overnight, basically. Google, slightly different chart, right? In terms of swing trading, that's why I like to buy relative lows, because even if this thing is going to crash down, there's still a little bit of room. But at the same time, let's just quickly redraw this. This is a good example of, I'm not trying to predict the earnings, but if we learn from this price trend analysis, is pandemic, we went down, and then afterwards up, then sideways, then down, and then up again. So we're in a short-term intermediate uptrend attempt in the market, and that's because people are starting to think about inflation coming down and pricing that in. That is why this was happening for some time. Now, you can see, are we at the bottom or are we at the top? We're at the relative top of this basically rising wedge area. So if we don't break out above this resistance right here at 108 or 109, the support level is all the way down here. The halfway point about 97, and then the lower support level of about 88. So these are the three levels that I'm watching on Google. Next, Meta. Meta had a very strong rebound, just like Netflix, but this is what I'm talking about. You have an uptrend going sideways into a strong downtrend capitulation with the V-shaped recovery into the uptrend reversal continuation. So once this trend line, if you studied technical analysis enough, we know once this particular trend line was broken to the upside, that's why someone could play this gap up, the breakout, or if somebody wanted to play this crash, this particular super capitulation crash right here on November 2022, I mean, that was short seller mayhem. And then we had the reversal to that. So when we connect these trend lines, very steep, still topping out for now at this top resistance area. Does that make sense? I mean, you can see that. Can you see that? We went from the low to the high. Starting to lose a little bit of that momentum. We did golden cross. Very good. Very good. It's just in the intermediate short term with some people, not everybody looks at the charts like we do, like I do. So there's some people that are still basing their decisions off the news or off of other data. I am aware of this bearish momentum here that's forming, like I said. So we could pull back to any of these support levels, 206, 194, 174. We need to really hold 174 though. Okay, let's move on to Amazon. Amazon, we rechart this very quickly. Amazon on the daily, we could see very similar to Microsoft, but we had this uptrend of longer period of consolidation sideways. Jeff Bezos left or stepped down as CEO, and then the decline after that with the market crash. Very smart timing on that in terms of avoiding crashes. And then we have this downtrend line. So what I want to caution people is one of these times, the bounce rally off the lows is going to be the real bottom of the market. I'm hoping that this is the worst of inflation, right? From this October, November into January area that felt, and the data showed, if you rewind the news, that was kind of that really low emotional period and a lot of fear about inflation and recession. So I'm hoping this is one of the real lows and that we actually continue this uptrend and break out of here as the inflation data starts to come down worldwide, not just for America. Now, we're still in this uptrend. In the very short term, like I said, we're right at the resistance level up here. That's why we also had one fake breakout. If we had that fake breakout again, something to watch out for. So the earnings is we're either going to blow out of the roof, breakout, or double top and pull back down, and then dip buyers are going to come like somewhere in here, maybe like a 98. Worst case, like a 88. Absolute worst case, if the whole market crashes, there's some like a lower $70 range here, which I would love to buy more Amazon there. Just for the value aspect. But the market is attempting its breakout. So the summary is, for a lot of stocks through this earnings season, is the 2 points in time that I'm kind of referencing, and most people I want to make aware of, is post 2020. So like a March 2020 to a June, July, like summer of 2020, after we had that pandemic stimulus where the government and Federal Reserve saved the economy for US, and which affected global worldwide, is we had the crash, but we kept breaking out to higher highs. Does that make sense? If you really study that 2020 period, like I've looked at it so many times. Now, the Russia-Ukraine war in 2022, that was a different problem, right? We were already starting to downtrend, but then we had the capitulation sell-off. And then here in the summer of 2022, when we start to see the Federal Reserve make moves against inflation with the interest rate, we saw this potential setup, which is what I want to be caution people of. So setup one is if we break out to new highs, it's going to be like summer 2020. If we pull, the opposite is if we start crashing again off fear, it's going to be like June to August to October area like this. So these two price action, basically we could try to essentially copy paste onto the stock market and the crypto market as well. If it's good, we should be breaking out to higher highs like that. And then once we're all the way up here, then the news will get all excited about bull market returning. It's still not 100%. Does that make sense? Because it's not really broken out yet. It's just barely right at that level where it could. What I'm saying for the bearish scenario is we could top out here if earnings are bad and then start to downtrend one more time. I hope that doesn't happen. A quick glance at XLF ETF. We did have this support play off the triple bottom, this yellow bar. So anybody who bought a little bit of those bank stocks, there were some gains to be made there. Also, I do want to make a point about Tesla. I did short Tesla this past week, made my gains as a swing trader, and that trade is already closed. So yes, was it risky to play before earnings? Yes, it was. But on the technical charts, it started downtrending, which gave me a little bit extra confidence. And then I knew some of that data that came out public news last week about Tesla having some sales problems, issues. So putting the two pieces of the puzzle together basically made that made 11% profit on that short, and that's already closed. But if the earnings for Tesla related tech stocks like Nasdaq keeps going bad, there's quite a bit of range for this thing to crash back down. I'm not saying it's going to, but if it does, it could, right? Because this looks like a double top to me on the chart. That's why it's extra reinforcement. Now, we can see we draw this right at the intermediate support level. Okay. If we lose that again, we might have a similar capitulation crash. The shorts might aggressively, they might be ready to do it. There's going to be some day trading volatility, and we might have one more bounce up. So we have to see what happens on Monday, Tuesday. But if it keeps downtrending and it doesn't break out to higher highs, it might tighten up in this range, or it might, if once it starts breaking down below 150, there could be a big problem here with Tesla in terms of that pullback. There's something to watch out for. And for some hidden levels, pandemic low to pandemic high, we can see that it's right dancing that 618. A mini Fibonacci for this particular range, somewhere between 155 and 150. That's what I'm saying, is that range. 155, 150 area. I want to watch out for that. Now, Netflix earnings from last week, this is what I'm saying, is somebody asked me about Netflix like 2 months ago, 3 months ago. And I think this person asked me maybe in the beginning of January saying, what's going to happen with Netflix? We had the earnings and it hit that higher high, right? High versus the low. Okay. But we broke down and we retested that resistance. So now Netflix earnings was kind of mixed and not so great. Okay. So we had a little bit of that pullback, still holding up, however. But I want to make note that this is a lower high. It's a lower high right here below 350. So if we don't break out above that, that is a downtrend signal, potentially, long term. Or it's just a temporary resistance because there's no other good earnings last week, right? So that's why this week will actually affect things more for this price action. But I'm just letting people know, if this doesn't break out to higher highs, I mean, the only other direction it could go is sideways, or it might even go down, retest this 287. If we lose 285 on Netflix and it does that downtrend, there's a big short opportunity there that I might consider if the support gets lost down there. All right, but that was last week. There's a lot that happened last week, and that's up to each individual trader to just investor if they want to even look at that. All right, let's move on here. Let's move on. I'm trying to do shorter streams, like I'm trying to do 1 hour maximum. So let's just move on to crypto, unless somebody has a stock request, which I could do later. But I'm streaming at a different time, so not everybody's here right now. Let's go to total. Let's go to total crypto. So thanks everyone for watching. I'm streaming live on TradingView, YouTube, Twitch, and we have a Twitter group as well. If you want to join that, that's public and global. So the big question on everybody's mind is like, why? Why did we just crash negative 10% on Bitcoin and Ethereum? Why? The answer is very simple. Number one, on the technical charts for this total crypto market cap, is we were right at resistance. We were at the ceiling, temporary ceiling. So now, just like QQQ, NASDAQ, high, higher high, low, higher low. So then the sell-off happened. We had bad earnings. Tesla, crypto, certain tech stocks sold off. Now, is that the end of the crypto market? Is it all going to zero? No, most definitely not. It's just a pullback back down to support, 1.09 trillion. This is normal. It's short-term normal. If you study the charts enough, you go all the way back to 2020 or even 2017 if you want. Like, we go all the way back to 2017. We had huge pullbacks in 2017 before another rally. Huge pullback before another rally. That's normal price action. Even in crypto excuse me, even in the pandemic. Huge crash, rally, another huge pullback, and then a huge rally. What was this one here? This large pullback, that was negative 20%. So this is normal. This is normal to me. Nothing to be afraid of. What would make me nervous or more cautious is if it started capitulation sell off like that. Once we lose like 1 trillion, then we lose 880, all the supports, the major supports on the way down. That would make a lot of crypto traders really, really nervous if that happened. But one pullback down into a short-term oversold setup, that's totally normal. That's basically normal. It's just the shorts have their opportunity and then they attacked. And people panic sold off bad earnings. There's a big short by somebody, right? But we do have a little bit of this bullish divergence, bullish momentum that's forming. The 4 hour is not quite ready yet to go up. The setup is building right now. We are below that pivot point. However, the EMAs, we did lose it, which is a little bit concerning, but we're still floating inside of the larger structure of the rising wedge pattern. I do want to point out that we do have this golden cross, so we could fall back all the way down to, just like NASDAQ, retest this, but we already retested it once, so I don't think we have to retest it again, but we need to maintain this basic uptrend structure. Okay, Bitcoin, go to Kraken. So Bitcoin as well is still up cross, and that's good. That has not happened since May, June 2020, and this is why I want to point this out. If I have any doubt in my mind, I always go back to the price action in May, June 2020. Just circle that, and then circle right now, February, March, April 2023. So now if we zoom in, what is that? What am I talking about? What does it even look like? We had this uptrend. Huge crash, and we started uptrending, large pullbacks in there in terms of red, right? Let me use the line chart so you can see the price better, right? Large pullbacks and kind of tightening up hesitation. We might have that going on in crypto. Another rally leg up and then huge crash down and then tightening up and then a breakout. So fast forward till today, I'm kind of seeing that we have this kind of sideways action and then a breakout, rally and then a big pullback and then another rally. And so if we have a pullback, that's totally normal. Pull back down, consolidate sideways, get the triangle set up and break out again, right? So it's just a matter of time. We have to digest and get through stock market earnings, let it pass, and then move on to the next setup. So just pointing that out to people. However, I don't want people to get overly bullish in their mind. You never know, right? We're this post-pandemic world, so it's slightly a different world that we live in now. It might take longer than before, and we don't have trillions of dollars economic stimulus injected into the market, so suddenly everybody has, some funds to use for investing. I do want to point out, though, that in terms of April 2023, this is when people start to get their tax returns in the USA. So this could explain why in April we're having some of these buyers up here. Long term, I'm still bullish on crypto. Long term, hopefully this will hold as a higher low pattern, and then we start to really rally in the market. Now, instead of basing on hope, I use charts. Thank you for the follow. Use the charts here and get that in. This bottom part of this extension doesn't really, it sort of makes sense, but it really ends right here in terms of the trend line. I like to use extended lines though, so I don't have to redraw. You can see we're still in the uptrend in the weekly. It's going to take some time. High, low, higher, low, higher, high, higher, low. Let's try to get back up to 50,000 Bitcoin if the earnings goes well. What will make me not have confidence in Bitcoin anymore is if we lose $15,000 Bitcoin again as a support. If we start crashing nonstop for 3 months, we lose 15,000, then it's not happening. Then it's not happening. We lose 20,000, 15,000, and then it's not going up. So those are our final levels in the sand. This applies to stock market as well. October 2022 low. We need to hold that higher low. It's going to take some time. The news is not going to catch up to it. So the news is not going to report it first. The technical analysts like you and I, the chart is, we're going to see it first on our charts that this could be the long-term bounce area, assuming, hoping that there's no World War III catastrophe or uh, the SEC in USA does not ban crypto trading or investing or do some strange taxes or fees or anything like that. That's the very long-term view. Some of you are crypto swing traders, so let's zoom in a little bit more. I'll do a little bit more on this Bitcoin, but you can see it's trying to hold that. It is in the 4-hour oversold. We might get a little bit more capitulation sell-off going in the next couple days before we get a potential rally. It really depends on the stock earnings as well. On the hourly, we already bounced stuff from that setup. It is Sunday in like the western areas right now in Asia. Is a weekend as well. It's not quite oversold here on this 15 minutes. So if somebody's trying to play that, just kind of wait for that. It is downtrending as well. Wait for a strong bullish divergence momentum to get in on that setup. But this is basically, we played that last one symmetrical triangle. We hit that 4 to 8% target, and then it started downtrending. That's what I'm saying. But let's see if we can get that recovery. Hold the support right here above 26.5K. Okay, let's take a look at Ethereum. Let's take a look at Ethereum. Now, Ethereum, here's a different chart. The Bitfinex chart. Like I said, Ethereum, I would have liked Ethereum to actually have pulled back and retested some of its lows down here. It would have been nice. But if it's not going to do that, oh well. It's crypto. People are not selling their cryptos so much. Okay, so you can see here in the Ethereum USD on the weekly, very, very long-term chart, it is literally riding that higher low, low, high, higher, low, higher, high, higher, low. We're trying so hard. Traders, investors, try to defend that $1,000 Ethereum bottom. Now we're up to 2,000, so we're up 100%. So somebody might be taking some of their profit as well. But is it starting to angle up? It is. And if we have another repeat of 2018 to 2020, these two circles, it could rally and then pull back again. So there might be one more chance. The other scenario is it keeps rallying up and breaks out above higher highs. That's why I always have this resistance level basically drawn above like a 2500 is probably going to be the next large level. Once it breaks to 2500, it has to hold above that. If it never comes back down, then we're probably going to go into another uptrend like this one if it happens. Now, the inverse is also true. If we draw the bottom side on this move, right, and then draw it like now, we're actually right at that sort of resistance level now. That's why we're pulling back. So it has to break out of this range, this 2100 range. It's just hesitating right now. I would presume that if we had amazing stock earnings and everything kept going higher and inflation starts to come down a little bit more, that would have been like the perfect scenario for things to go up. Now, drilling down a little bit more, zooming in on the daily, we do have this golden cross on Ethereum. That's why it's not always 100%, but it's a good sign that this is happening. You just need a matter of time to wait. Have we had a fake out before? We did have a fake out before, and that was the actual pandemic itself. So this is what I'm saying is we're from an uptrend, and then once we have this higher low and then we lose that support, something is wrong. Basically, so for now, we could have these higher highs, higher lows, but we need to make sure we don't go below 1650. If we go below 1650 and we start downtrending and get out of this, if we break down below this weekly line, that's big trouble for Ethereum. So I'm very, very closely watching that on the side. All right, Binance Coin. Still up off its pandemic lows. I mean, and a whopping 33,336%. So 33x is up. So the Binance investors, they are hodling. They are hodling. Because if they were selling off to take a profit, then they would just be crashing right now. But it's not. So people are hodling this. Didn't quite hit its weekly support low. Aha. So now we can see where are we with Binance Coin. It should have hit this low about like a 240 area. That's the support. But if we have a breakout to amazing higher highs, it needs to really break out above 358 right here, 358. That's that resistance that we're looking at for Binance Coin. Until it does that, it's just normal. This is normal. The EMAs, it's going sideways above the EMAs. It's okay. It's okay. Trying to really go above that pivot point, 327. Keep in mind, this is an investor mindset. It's going to take some time. You do have that golden cross as well on Binance Coin. Very, very subtle, but like I said, on some stocks as well, like on QQQ, you can make an argument that a ascending triangle is actually setting up as a bullish case. So let's that's our bearish target on the purple. We have a bullish target as well, right at that 456 area. But I want to caution people. I have seen this before where we did have an ascending triangle at Bitcoin $68,000. So I'm not going to push this setup until it actually happens. I need to see the price breakout, retest, and then go up like one more time before the chartist will probably call it. But in terms of where's a good place to have bought, 200, 240, somewhere down here. Buying the breakout sometimes, if it works sometimes, but if you get stopped out too many times like that, that's why I start to buy lower, and then you just leave it alone and you're already up like 30, 40%. You just leave it in there. Swing trading mentality. So on the H4, we have this higher low, higher low. We did have this pullback on the RSI. Didn't quite crash though, which is a little bit interesting to see on BNB. See if that pullback happens with some of that volatility. See, right on the 15-minute, we do have this double top on the RSI. That's why I'm anticipating. Where's that little pullback on the longer term time frame? Okay, next chart. I'm going to go a little faster now. I don't see any requests. Let's go to Solana. Now, Solana, trying to maintain its consolidation area. If it breaks out above $26, then we might have some action. If it breaks down below 16, I want to caution people against that. Uptrend probably not happening yet if we lose that support level. Cardano in the B area down here, you can see that we went from up A area sideways down into the B area, and now we're attempting to bounce. It's going to take some time to get through the earnings, but if we can hold that, which is our weekly kind of support level on this trend line, we could hit the rebound back to $1 over time if this thing breaks out. We need basically we need the momentum to continue on almost every single crypto. It takes some time. XRP also with a nice little bounce. We did at that double top. That's okay. Now it's testing that 200 EMA, the 42-cent range. High, low, high, higher, low. We need to hold that above this lower 40-cent range. Try to bounce up back to the 53. Starting to see little signs of, again, potentially this ascending triangle, but that's a little bit of a stretch for this. I do want to caution people, after we have a rally, okay, if we have a breakout setup, if you see bearish chart patterns like a head and shoulders and this thing comes down, that means as the trade, sell. As an investor, you don't have, it doesn't have to be like that. But as a trader, you know to sell and you buy low support. So if we're gonna have that again, it's not gonna be a real breakout until we break above 53 and hold above 53. So now what I'm seeing is if we zoom way out, we're starting to get a rising wedge pattern. All right. So we need the continuation. Very important. So I want to point out to people that just a price of going straight up like this, that is not sustainable, right? That is FOMO rally. If the price goes straight up and pulls back down like that, that's not real. That's not real. What's real is the prices, if it keeps going up slowly and it never comes back down, aka summer of 2020 and 2021. If you just rewind the Bitcoin chart, you can see it for yourself on the charts. And I've shown it many times. Now for AVAX, hopefully this turns into like a potential upside down head and shoulders. If it does, that could be 90% profit to 100% profit. Very, very long term, however. It might not even happen this year. It might be next year. But I'm giving these big setups so day traders can work within this framework. Swing traders as well. So stop loss would be somewhere between like $14 area. It is tightening. Now, the upside down head and shoulders has not happened yet. So somebody might say, let's just redraw. Somebody could make an argument about some dirty descending triangle, but more accurately, it's kind of this descending wedge area channel almost. So the breakout, it has not happened yet. That's what we're anticipating. So the key for this pattern is this right shoulder at $14 needs to hold. And literally, we're kind of staring at we almost had that breakout, almost, but not yet. So we had to break above the resistance of 22. So it might seem like we're doing nothing right now, but no, we're actually charting. We're getting set up for the potential bull setup while thinking about risk and thinking about the bearish setup in the back of my mind. DOT. Why I like this chart is we've retraced all the way back down to almost this chart's almost the ICO or post the ICO price. At one point, DOT was negative 90% off. It's like an NFT. It's like a product on the shelf of the store. If I see an Apple iPhone new for 90% off, that's an insta buy for me. If I see, if someone were to see Apple MacBook Pro or whatever MacBook laptop or AMD PC laptop, 90% off and is new, many people would buy that. Same thing with crypto, except it's a digital asset. NFT is digital. You're not going to touch it with your hands. It's not tangible. For the most part, for digital cryptos, is just that asset versus value proposition. Now, keep in mind, crypto is all about speculation and trading. If we're honest, okay, I was talking to a colleague. Government has already implemented blockchain technology into record keeping in certain industries. The speculation of crypto, the trading aspect of crypto, leverage, futures, that's like basically unnecessary, right? If we were talking about store of value, we don't want store of value to go crash down negative 90%. That's why these cryptos is not going to become real money. We're going to have stable coins could become real money someday, but the actual speculative altcoins is not going to become used as fiat currency. So it's all about speculation and, to be honest, to be frank. So why did I draw this? Well, we could see where the entry is here at 550, and we see the stop loss, a very, very large stop loss, at least negative 25 to negative 50%. But that's my downside risk on a small amount of capital. And where is my profit targets? Anywhere between $10, $15, and $20 as a long-term target. This low support right here, $4, definitely needs to hold, and we need to break above the $8. I'm I'm sort of looking at DOT for a potential future investment. Dogecoin, you can see large symmetrical triangle to the side. And this is what I'm talking about. If you have a straight up, this is what I call like textbook FOMO rallies, and somebody accidentally buys here and then they crash. They're too late, and unfortunately, they lost negative 37% on the position. That's not good. Can't do that too many times. So the key is buying low. Buying low relative lows and selling at relative highs if you're a trader on whatever time frame you are on. Takes experience and practice. It should be also tightening, but the downside target's still here at that lower 800 range. Might want to enter. This stop loss should be way large, but there's a little bug sometimes. You probably get what I'm saying, though. Trying to buy that low. Actually, not everybody does, so let's draw it. We'll do like a... This one sometimes just doesn't work well. But you can basically see the picture like that. If the entry is somewhere down here in the 908 level. Okay, let's keep going here. Matic also had its rally. So some of these altcoins, not all of them, thank you for the follow, not all of them are going to go up like Matic. So Matic probably had some fundamental news, or people just like the coin of Matic. It's an old name now. And this is what I'm saying. Some of these altcoins like Cardano didn't rally this much, but Cardano's like right here right now. So if Cardano keeps continuing up, you might see something like this Matic chart. It's already 200% off the lows. So this is what I'm saying. Many cryptos long term have this type of bounce potential. Half of them, though, that I'm looking at are still in the down range, is why I keep talking about it. Long term, however, this one is a little bit more risky. Why? Because we broke out. Okay, we went up, came down. But if we don't break above the higher high here at 180, this could be like Tesla, this lower high. And then if it doesn't go up, and this is a bad case scenario, it crash back down to like 25 cents. That's why the risk is higher. The higher the price, the higher the risk for cryptos generally in the short term. I'm not talking about 20 years from now. I'm talking about like 2 weeks or 2 months or 2 years from now. So for example, we have people from all walks of life and all skill levels here. So let me just take a quick detour. Thank you for the follow. A quick detour, just very quickly, about the general history of Bitcoin and what am I talking about. So we use technical analysis to analyze price and volume and trends and patterns. It is not random and it is not perfect. Technical analysis of price trends, indicators, none of it's perfect 100%. So we use it just as like a helpful tool. It's better than never looking at charts at all and being completely blind. But sometimes we need a little bit of long-term perspective. So what am I saying is, imagine, I'm going to just say trader A. Trader A has money and wants to buy crypto. Now the question is, what crypto, how much, and when, right? When are we going to buy? When are we going to sell? And why? Why might be more of a stock fundamentals, like more as a stock investor. So some people don't need a why in crypto. It's just how much money, what crypto, and then, how long are you going to leave it in there for? So if we think about it just generally like that, in terms of these risk rewards, okay, there we go. All right. So just a side note, this magnetic, this risk reward tool changed. It didn't used to scale automatically like that. Let me just check the settings for a second. Is there some kind of new, the code, like it feels like it changed a little bit. Maybe it's that, or maybe it's the magnet. Anyways, if we have this risk reward at like a 25% and this box at, let's say, 100% investment. Now, where somebody buys is very critical, right? If somebody lucked out and bought crypto, Bitcoin at $200 back in 2015, they have a lot of profit right now. If somebody bought way up here at the top, let me mark it here. If somebody bought here at the top and then held all the way down to 2019, then they probably panic sold down there. So the entry point is very, very critical. That's what I'm trying to say. Okay. If somebody bought here, basically like I did in 2019, we made profit in that leg up for swing trading. If somebody bought at the pandemic, right before the pandemic on accident, right, and then it crashed down, probably panic sold and lost almost all the funds, right, negative 50%. If somebody bought crypto Bitcoin at 60,000 or 69,000 and held until, here, probably panic sold in this area, right? Just the general, from what I know and from what other people have told me. Unfortunately, some people did buy Doge at 70 cents or 65 cents and held it all the way down until now, and they felt pain for a year straight. So the entry point is extremely critical. The position sizing, the risk management, choosing which coin, those are all decisions that somebody needs to learn and do some research, right? We're all responsible for our own trading accounts and decisions that we make individually. So why did I buy cryptos and altcoins, Bitcoin? Let me see. I bought, just a quick recap of the entire stream for this year is I bought Bitcoin, bought Shiba Inu, bought some VeChain, bought some Litecoin, just to name a few, right? Just being transparent in this general area down here. Why? Because it's relative low. Everything I learned about crypto, if you just stare at the chart, you just turn everything off. We don't need anything. No tools, no indicators. You just look at the price and understand. You just talk yourself through it. And this applies to all skill levels, beginner, intermediate, advanced, professional. Is where would I wanted to have bought? Where would I wanted to have sell? Where did I want to buy? Where did I want to sell? Where did I want to buy? Where did I want to sell? Buy, sell, buy, sell, buy. Is it time to sell yet? No, not yet. That's why, as an investor, you study the charts enough. Maybe this intermediate one, I can erase this one here. But you're starting to see a pattern, right? Buy the lows, sell the highs. Buy the lows, sell the highs. Buy the lows, or buy the low here, sell the high. Selling this high would have been pretty bad though, because if you're a long-term investor, you're probably kicking yourself like, why did I sell in June 2019? Well, there's a pandemic, so it's double-edged sword there of what somebody wanted to do with that. But then I bought in the pandemic. I didn't buy the bottom pandemic. I bought here to make sure we're actually gonna break out of there, and then I sold up here. Just a recap. So I bought again because I believe this is kind of relative low. If it's not, that's okay. That's okay. I'll just probably close my positions, right? Just start to move these stop losses up a little bit. If it starts crashing hard, then just sell. There's no, it's very simple. Don't have to make it rocket science about doing some one-page formula. It doesn't have to be like that. Simple. But what matters the most is the risk management. Okay, and this is where you need the full stats mode. Risk management, 25% stop loss and 100% profit target. And we're going to end in a couple minutes, but this is probably the most important part of trading or investing, which if you're a beginner or intermediate, even if you're advanced, sometimes we could get so wrapped up into the indicators and the tools and the strategies and etc. But what matters kind of more, what supersedes that, or becomes the framework of what all those tools fit inside of is the risk management. Okay, meaning it's important. Okay, summary is important. So what's my entry question mark? What's my stop loss question mark? What's my profit targets question mark? And what's my position sizing question mark? Risk management for trading, right? Extremely important because my entry, here's my entry in yellow. My profit target, if I'm a trader, is here, green line, and my risk management is in the red here. Got to start thinking like this. You have your entry. You have your profit target or targets, plural. You have one stop loss, or, if you're advanced, you get multiple, but most exchanges only let you put one order in one market order, basically. Or you could have cascading orders, but it has to total the correct amount. But for profit, for the example here, I just keep it simple with one profit target, one entry, one stop loss. So then the risk manager becomes, now you say, okay, I understand that you have to have good entry and you have stop loss for emergencies and you have to have multiple profit targets on the way up. But then the final question is, what about my position sizing? Meaning if total account size equals $10,000 for an example, risk per trade equals 1% of total account size, the TAS. Okay. 1% of total account size, which, instead of guessing, this people could do this easy, but $10,000 times 1% equals what? $100. Okay, risk per trade. So then there are a bunch of calculators out there. If you're in my Discord, there's the stock position sizing calculator, but you just have to do this for yourself. And sometimes crypto is a little bit trickier because, Shiba Inu is like 0.0000 something number. So, there's the calculator sometimes doesn't work for crypto, but you can still calculate the dollar amount. All right. So, for example, if I'm trying to risk 1% per trade, and that's $100 on my total account size of $10,000, then basically, if my stop loss for investment is 25 examples, investing, educational, I could have a negative 25% stop loss for investing. Okay. So basically, there are many examples like this on the internet and Google, etc. So that means I could put 4% of my total account size capital into the trade. So if I have negative 25% stop loss on 4% of my capital, that would be 1% total account size loss if it's down. I hope that makes sense. Basically, the risk management for trading to survive in this, as long as I have, is basically you only risk 1% of your total account size per trade in the beginning. That's how you never blow up your account. That's how you never go bankrupt on one trade. That's how you never YOLO trade, meaning leverage trade way more than somebody's account size. That's why I've heard and I know multiple people who have blown up their accounts because they don't have the risk management. You gotta implement this. And the way to practice it is, this suddenly went like very advanced, intermediate to advanced style. So very simply is, if you want to practice, you just come in here, open the trading panel, and then open paper trading, connect, turn it on. Okay, turn it on. Last week this was plus 2,000%, $2,000, and I could have closed that position totally fine. This is a random trade, by the way. Right? So this is how you learn. You do trades, okay? You do trades and you learn from it, right? Now, in terms of Bitcoin, this is my super long investment trade. So this is probably, I'm just going to leave it there for like a year or something like that, unless I erase the paper trading, restart it. But this is where you come in here. Probably have to switch this to a daily, but we'll leave that. You open up the order panel on the left side. Okay. Then you figure out, all right, I want to buy 1 Bitcoin. You can just leave it at 1 unit, and then you have the take profit and stop loss, right? The take profit, the green line, and the stop loss, the red line. This price, your entry, is the yellow line. Hope this all makes sense to people, because this is the actual trading part of trading. The analysis is the left side of the charting. The right side is more of the screen, is more the actual execution of the trade. So don't mind this right here. This is a very long term, like it was a random example of what happens when you just buy randomly at, where do we buy? 28,000. That was like here somewhere, randomly like this. So if your account looks like this, it's up to you to decide. But for me, I'm not worried about anything at all. Hopefully we can hold that higher low. Actually, the entry was zoomed in right here. So it was like late March entry, for example. But for me personally, my own personal account, I bought way earlier than that, right? So that's why, you have a cushion, margin of safety. The stop loss is a margin of safety. The position sizing is a margin of safety. Okay? So this is kind of the 1% rule. If you Google it, it might be on TradingView articles or on YouTube, but definitely on Google. If you look it up, that's how you survive in this market, especially in the volatility nature of the market. That's how we do it. Okay, somebody's saying the volume is muted. It looks like the volume is good. Sometimes the volume icon or the mute button on the video player of YouTube, Twitch, or TradingView, like sometimes randomly automatically gets muted. So might have to just unmute and check that. It looks clear on my screen right now. All right. Let's have a couple minutes of questions or requests. And if you want to ask me a question, I'll do a little bit of questions or requests, and then we're going to sign off for today. So I'll just wait like a minute here. We have a question from Q on TradingView. The mute is on their side. Okay. And what time are the markets supposed to open? The cryptocurrency market is open 24/7. Most foreign exchange is 24/7, just open every day. But the majority of trading is in normal business hours. However, the stock market, USA stock market, is open 6:30 a.m. Eastern Standard Time to 1 o'clock p.m. Eastern Standard Time, Monday through Friday. USA stock market. So that's why it's a Saturday right now. So the professional bankers, some of the professionals, they take weekends off, like Saturday, Sunday off. They come back Monday through Friday. You can see that too. If you trade in the market, if you day trade, there's certain times where things get super hot. But I think you were just asking me about general market open hours. Bitcoin, like right now, you should be, if you use a US dollar, are you talking about crypto or stocks? But if you talk about crypto, you should be able to do some paper trading on US dollar based cryptocurrencies like Bitcoin USD. I recommend starting off with Bitcoin USD and Ethereum USD just to start things off for the paper trading. But sometimes it doesn't fill properly. Let's try it. Let me do a reverse example just to show people what happens if you want to sell one Ethereum. Do the opposite right now. Let's say my target is 1434. I'm shorting right now on. It's probably not a good idea to short, but let's just do it for the education. 2166 stop loss, 1 Ethereum at the market price right now. Okay, so it does work right now. So if you want to practice crypto day trading, etc., it still works, right? On the weekends for crypto trading. So obviously crypto trading is 24/7. This is paper trading too. But you can, I just practice shorting right now and I'm doing this particular setup. Let's see, just to see if what happens if we're going to actually get that higher low setup down here in the short term. And it does tell you short and long setup. Okay, so I answered that question about times. And I do want to recommend to people is there's a lot of educational articles on TradingView, Google, and YouTube. So the more you study and practice, the better you'll become over time. And I still study and practice too. I'm on a different system. All right, looks like we don't have that any requests or questions remaining for today. So just want to say thank you so much, everybody, for watching, following, and joining and chatting today. I am streaming live on TradingView, YouTube, Twitch. We also have a new Twitter group, same username, No FOMO Charts. So if you want to join that, please join that. We are migrating from Discord back to Twitter over time, maybe about maybe a month or so, because Twitter's more on the public and it's on the public global side, which I think will benefit the entire group as a whole. Instead of being a private Discord, that's kind of the thought process there. So we're just going back to Twitter. That's where I started, actually. So we're actually just going back to the Twitter group from Discord. All right. Thank you so much, everybody. Hope you have a nice weekend. And remember, margin of safety, stop loss, and let's not get sucked into the fear, uncertainty, doubt of earnings. Let the price be our guide, and we have margin of safety. Thank you, and I'll see you next week. Bye-bye.